Welcome, everyone. I'm Pete Blackshaw. I'm the CEO of Centrifuge, and we're absolutely kind of thrilled to have you joining us today for our Fintech Frontier series presentation. Today's session is the second session in a series, three-part series, and to catch up on previous events, and they've been awesome so far. Definitely go to fintechfrontier.com. We believe fintech can and is being built in the middle of America, and we aim to accelerate the creation of cutting-edge financial technology tools by providing a full suite of support services to entrepreneurs. We really want to grow this entrepreneurial pool here. All this is made possible through fantastic sponsorship by our dear partners, Western and Southern Financial Group, Fifth Third Bank, and just recently, drum roll please, Jobs Ohio. Big deal for us. We're especially excited for today's session, as this marks Fintech Frontier's first opportunity to partner with 630 Ventures, a Midwest VC focused on fin and insurtech, digital health, and cybersecurity, which obviously is a big topic these days. Now, we'll hear more about 630 shortly, but let's jump into why we are basically here today. As we established in our last session, our financial lives are increasingly becoming, relying on digital tools, whether it's, sending money through mobile apps, depositing checks through a smartphone, camera, or purchasing insurance without ever having to talk to a human. Financial services are taking a kind of a digital first approach to customer experience. And for many, that means increased convenience, enhanced and even more personalized service, and time savings, and even cost savings. But is that true for all? And that's kind of the heart of what we're going to be discussing. I mean, how does this impact those living paycheck to paycheck? What about those who have less access to technology? What about those that, are not getting, where others are kind of getting disproportionate advantages from technology? So we have a fantastic lineup panel here lined up for you today. So let's move into introductions. Andrew, I hope I get this right, but our facilitator today is Andrew Wagerin, principal with 630 Ventures. Andrew brings a super interesting perspective on how to and how digital health and fintech can collide. Super timely topic. In fact, prior to serving as VP of Strategy and Partnerships at City Ventures, Andrew actually led teams innovating, new oncology treatment solutions. So a wealth of experience. He'll be our guide from here, but I'll be back towards the end for some recap and to facilitate some of the Q&A from the audience. Please be sure to drop questions in the chat. I will say, having moderated last week's session or 2 weeks ago, some of the questions really opened up a lot of fantastic dialogue. So we've got a structured dialogue, but you can take it to the next level with your active participation, and we'll definitely try to include as much as possible. So thank you again for joining us. And with that, I'd like to welcome Andrew to the proverbial stage. Andrew, take it away, dude.
Yeah, thank you so much, Pete. Really thrilled to be able to be with you all, and special thanks to the Centrifuge and Fintech Frontier teams. Just really appreciate your partnership and being a part of today's panel. So real briefly, I'm a principal at 630 Ventures. We are headquartered in St. Louis, Missouri, with offices in Singapore and Amsterdam. We invest mostly in seed and Series A companies at the intersection of health, wealth, and security. And so many of the issues today are near and dear to our hearts, but we're just thrilled to have an impressive panel for you all today, and can't wait to get into it. So maybe I could invite Chase, Martha, and Brad to turn your cameras on and unmute and give a brief introduction of yourselves. Maybe Martha, would you mind if we started with you from Brewer Lane?
Sure. I'm with Brewer Lane, which is a venture capital firm investing in fintech and insurtech. Um, we've been at it for nearly 2 years now, and my prior role was also investing in InsurTech at Excel Innovate. So I've been in this part of the market for 6 or 7 years now. The big investment that put us on the map at Excel Innovate was Lemonade, so that worked out well. And my prior experience is really corporate development, investing very heavily in data and analytics companies, really trying to make the data economy work in a more rational way.
Thank you so much. Why don't we kick it over to Brad? Would you mind introducing yourself?
Yeah, thanks, Andrew. I'm Brad Howeller. I'm one of the co-founders and the CEO of PayTheory. And PayTheory is a provider of inclusive payment solutions. Super excited to jump into our chat today.
Thanks, Brad. And how about Chase from Zertu?
Hi, everyone. Great to virtually meet you, Chase Dillon, Vice President of Growth at Zertu. Zertu is the world's first relationship-based lending application. And our mission is really to drive financial inclusion, one relationship at a time. We know how all awkward it is to try to ask for friends or family for money or to even try to collect on those funds. And so Zertu is making a better world through connecting people through our application.
Thank you so much, Chase. And, I'd like to maybe just set the table a little bit here for the topic for today. So just building off of what Pete was alluding to earlier, throughout my career in financial services, I feel like digital transformation and digitization of services has just been everywhere in the air. And it's the increase in technology and products, digital products have been impressive and have grown family financial opportunities, tremendous opportunities for firms. And it seems as if the world is just becoming more and more digital every year. And I think us on the panel and many of you viewing today view technology in general as a great benefit to firms and individuals and families alike. But a part of this, I think as time has gone on, a part of this is being seen more and more is that there's still pervasive issues of lack of access or inequitable access to products digitally. In the US alone, there's about 7 million households that are unbanked, meaning no one in the household has even a checking or a savings account from a bank or a credit union, and many, many more are underbanked. So this underbanked group, they have limited access to mainstream financial services. And, for all the wonderful products that are coming out, if families and individuals can't get access to those products, then their benefits won't be as beneficial to the individual, the family, or society in general. And so I think, I'd love to hear more from our panel about how we can build a more inclusive structure that ensures we don't leave families behind and that we are responding to customer needs. And I would love maybe to ask Martha, if you wouldn't mind kicking us off. I'd love to learn about your perspective here about this issue from a macro level, and how do you view the landscape, or maybe any firms you're investing in or who are familiar with who are really addressing this issue of families being left behind by the digital world.
Absolutely. And I think that probably what I'll start out with is Andrew's absolutely right in terms of there are a number of people who don't have bank accounts at all. But if we look at people who are unbanked plus those who are underbanked, in other words, they're not really using a bank for all of their transactions, that number comes up to around 66 million people, which is 20% of the population of the US. And if you then add to that the people who are living in a cash economy in a digital world, the total amount of cash economy in the US is estimated at about $2 trillion. So I think that as a VC, I think one of the things that we always ask about is what's the total addressable market? And from a macro point of view, I think what we're seeing is, although digital gets all the news and all the chat, in fact, there's a big customer need in terms of people who have cash who need to spend it in a digital world. And so I think that is one of the reasons that this is a very attractive issue, even financially. And I am a believer that the best motive is the profit motive. I think it keeps people focused. However, I think that if you can achieve that and provide a societal good, I think that's just hitting the jackpot. So I think that that's one of the ways that we've looked at this. And we have looked at several businesses that have focused on inclusion and on underserved populations. And I've been interested in how many banks and insurance operations there have been that are focused on, for example, specific populations like the Latinx population, which has traditionally been somewhat underserved and often has some of those cash needs, as well as potentially language needs, as well as maybe a level of comfort culturally in dealing face to face that is higher than some other cultures. So I think that we have looked at several of those businesses, and we're really seeing a lot of opportunity in that area.
Absolutely, absolutely. Brad, I think that dovetails very well into your work and to Pay Theory's mission. And this is a large issue. Sometimes when I hear these numbers that Martha was saying, it's almost like jumps off the page to you. It's like, I think many of us don't realize that there's that many households and individuals in the US that are unbanked and underbanked, and it's a big pervasive problem. I'm wondering if you could talk to us a bit about your work and how do we focus on serving these customers in the way that they want to be served?
Yeah, absolutely. Thanks. Thanks for the setup. And I thought Martha hit on, some really key points there. When my background in the payment space is kind of, my co-founders' experience in ed tech and other family tech areas really has kind of given us insight into the trends with payments. And I know that Chase will be able to speak more to sort of the lending side of the fintech equation. But in the payment space, everything is digital, right? Everything is future proof. Everything is frictionless. We have a lot of buzzwords in our space. As we started to look at those trends, we would see, and I think you kind of hit on this in your intro, the increasing digitization and digitalization of our lives, internet platforms, mobile platforms, where interactions that used to be face-to-face are now moving, to those platforms. And for good reasons, if you're a business, right? I mean, it makes running your business that much easier. But the net effect is, as we're kind of alluding to here, is that all of a sudden, if you're a person who's not living in a digital world or not fully capable of participating in a fully digital world, you are now starting to face access barriers. And so, our sort of counterintuitive view at Pay Theory, at least, is that rather than just thinking about future proofing and frictionless, we kind of think of those as table stakes at this point in time. If you're a fintech, we also think that there's a really important need to current proof this solution. And so what we've done in our payment acceptance platform is married the ability to, in addition to credit and ACH processing that is very typical in e-commerce transactions or mobile transactions, we've added a virtual cash component to that, which allows, consumers and merchants. In our case, we focus on family tech merchants, merchants who we feel operate in verticals where there can't leave anyone behind, right? For families, these are must-pay expenses. And so we try to bridge that physical digital divide by providing a way for a family, a consumer, to go online and indicate that they're about to pay a bill, right? But then be provided with a barcode which can be taken to one of 60,000 retail locations around the US, where they can actually transact in cash. Allows the school, the daycare facility, the healthcare provider the ability to go cashless or to operate in a mostly digital world, while still giving families and consumers the ability to transact when, where, and how they need to pay. And that's really what we're focused on. And we're working on a number of other solutions. All of ours are around that moment of payment, which is another area that we think has been left out sort of in this, the look of an inclusive fintech, a lot of neo-banking, options, credit options. But we felt, and it's I mean, it's our background, it's our expertise, so it kind of laid in nicely there. But we really felt like that was an area that was being overlooked. So that's kind of the way that we're specifically going after this. But I think there are a lot of great companies out there looking at different aspects of how that happens, right? Like Chase and Zertu are kind of like, all right, how do we help people, have the cash in order to be able to spend? We're there sitting, all right, we're saying, hey, this is the moment where dreams are met or everyday needs are taken care of. So like, let's figure out how to solve those issues. And so, I think anyways, that's where we're the kind of angle that pay theory and we're trying to tackle.
No, I love that, Brad. I also love the term current proof as well. I think oftentimes we're thinking of the future, but for families, like if I prefer to pay in cash for my children's educational services, you all provide a way for me to do that, and it allows that bridge to be built from the sort of analog to the digital, and helping people in the current day with their current customer needs. I think it's just fantastic. I'd love to hear a bit from Chase, if you don't mind, from Zertu, and just how Zertu is serving your customer base. If you could describe a bit about your all's work, who are you serving now and the way that you're serving them and really responding to those current day customer needs? I think we'd love to hear more about it.
Yeah, absolutely. I think it really just comes down to just being very intentional about the technology you're building. In my world, even going as far as the partners that you're partnering with. We at Zertu have a double bottom line, we like to say. Yes, we drive our returns for our investors, but we always keep that mission of driving financial inclusion one relationship at a time top of mind. So everything that we do falls within kind of that double bottom line. And for an example, 20% of our customers who come through the application we know are underbanked. They don't have access to the digital economy, and where we partner with companies like a Reliant Energy out in Texas, where these moratoriums to keep users' lights on are coming to an end, and these situations that their customers fall into are literally almost like life and death. It's insane to think about some of these situations where they literally have to make the decision of, do I put food on the table for my family, or do I keep my lights on? Some of us on the call may have the luxury to go out there and use the digital economy and financial technology to help through that, but these consumers don't. And so our mission to partner with these companies to let them know that there is an alternative way to keep your lights on by tapping into friends and family. We actually allow these friends and family to pay these users' bills directly so that the funds aren't flowing to the users themselves. They're actually flowing directly and in real time through ACH, debit card, credit card transactions to the biller directly. So these funds are going right to directly to Reliant Energy. That consumer's lights now stay on. They can also put food on the table. And we've now just given them access to the digital economy where they haven't had the opportunity to do that. Zertu also offers things like our digital and physical debit cards, where users who come in who are asking for money, and to back up, we try to bake into the product experience as much accountability and transparency as possible. And on the accountability front, it's allowing those consumers, regardless of their status in life, if they need help, we like to say a hand up versus a hand out over here at Zertu, allowing them to sign up for a free bank account, connecting things like deposits of their paycheck, and giving them the empowerment to make these decisions where otherwise they didn't have access to before. I think a big part of it comes down to education. It comes down to just really a trust layer. Yes, these banks aren't available within their proximity, but there's a huge trust layer there. And friends and family are some of the most trustworthy individuals, and we think that they are the ones that are most suited to make those credit-based decisions based off the relationships for you, without hurting your credit score and creating this ripple effect that is generational. Going into predatory loans, that's not only going to put me further into debt, but again, teach bad habits to the younger generation that is influenced by these decisions that they're seeing firsthand. And so when we can bring friends and family to the table, connect the dots through our partnerships, we click on those boxes of not only driving revenue for our company, but driving that financial inclusion one relationship at a time. And so that's really what we're focused on. Those are the consumers that we're serving today, and expanding into other verticals and really thinking about what are those things that are life and death, where it's medical bills, unforeseen medical bills, where they don't have to decide, I can't take my son or daughter to the emergency room today, but they really need it. Why should they have to make those decisions? Where Zirchu kind of comes in there, helps and bring a layer of equality, allowing them to have, no, I do have another option. And my friends and family are willing to help me out, but they just don't know how. And with Zirchu, our platform, we're allowing those connections to make sure that these kind of really hard decisions aren't having to be made, but that they have the access, the inclusion, and the fundamental education around everything that's available to them to live an ordinary life.
No, that's fantastic. And this is another number I think that just jumps off the page from me is I think I read about $200 billion a year in the US is loaned between friends and family. And it's one of these activities that's happening already. And I love that, Zirchu is facilitating that activity and bringing in sort of a B2B partner side who also can come into the mix and really address the core problem so that the users don't have to turn to a high interest credit card or a payday loan or other options they may have that may not help them as much build up that financial health over the long term. So maybe Martha, I think there's a theme running through this discussion as well of families who are unbanked or underbanked by preference versus by necessity. And so allowing customers and consumers to engage with financial services in the way that they want to, versus just a lack of access to the products that they would ordinarily or otherwise love to engage with. I'm wondering if you could tell us about some examples of technology, tools, education, or other efforts that you see that are working to reach more unbanked and underbanked households, maybe companies that you feel are going about this in the right way, or innovators and entrepreneurs that are addressing this issue that you've seen. Would love to learn more about or hear more about what you've seen in this area.
I guess one of the companies I would talk about is Mocafy, which I think stands for Mobility Capital Finance. But one of the things that they're doing, they just had a big announcement with Los Angeles yesterday about a program that's already going on, which is essentially taking the money that a city like Los Angeles is already in the habit of providing on a cash basis through checks to its inhabitants, to specific groups, and putting that onto a debit card. So all of a sudden moving the ranks of those people into the digital world. And for example, Los Angeles just has already started using this with the emergency rent relief, so that people are being issued an Angelino card, which is powered by Mocafy, and then they can use that for what they need to, and they can make those payments digitally. And in fact, in a one of the things that I think that we see more and more of, a cooperation between a tech startup and the old world. The Angelino card also enables people to make free cash withdrawals at Wells Fargo. So I think that you sort of see that full circle. When you need cash, you need cash. When you need to be able to pay on a digital basis, you are now able to do that. And instead of there being sort of a one-to-one relationship between the city and an individual, you now are starting to see that literally the city is putting that money into circulation in a way that is a new way to do that. So I think that Mocafy is definitely a company that I've been impressed with. They've built out in Hawaii. They are doing tests with some other, maybe Sacramento or Stockton, around universal basic income. So for some of the tests that are being done on that. And I think that you're starting to see people think about that. A portion of their activity is also providing resources around credit literacy, financial literacy, because I think one of the things that Chase just talked about is this generational topic. If you didn't see it in your growing up family, how do you learn about the proper way to handle money? And how do you learn about some of those decisions that you think is a little decision, but it turns out to be a massive decision. And I think that those are, that's one of the kinds of companies. And then I think the other kinds of companies that we've taken a look at have been sort of Welcome Technologies, FinHabits, which are really neobanks for specific groups, and therefore they're able to tailor to a group of customers and really provide an affinity group as well as financial services. So I think that those are kinds of things. And I want to just jump back to Chase's point about this predatory lending issue. I think one of the things that has been most difficult for us is figuring out where the line is between giving people financial choices along the entire credit spectrum and just plain predatory activity. And I think that, for us, that has been something that we think about quite actively as we evaluate opportunities which involve credit. Because I think credit is hard. I think Chase has sort of the noble end of credit, where people who know people are lending, but I think you can get trapped in that. And I think it's sort of, while I wouldn't say I have a double bottom line, I do feel like I have institutional money, and I have to make sure that we act in a way that's appropriate, and that is also societally appropriate. You don't want to be on the wrong end of that.
No, absolutely. That really strikes me too, especially the predatory lending side. And I think, it's interesting, and there's obvious and really horrible downsides to certain types of lending that, can almost makes users take a couple steps backward to try and take a step forward. But I think it's also important to realize that there's also, I was reading about this recently, and users of these types of lending products will say, I know the interest rates are bad. I don't think this is necessarily a good product, but I like the convenience of it. I think, in terms of payday lenders, I think there's more locations than McDonald's in the United States. I heard that statistic recently, but so it's convenient. I don't have to worry about my credit. I can get instant access to money. And so I think, as innovators and professionals in this space, I think it's important to learn about and study and look at more what customers do want, and try to build that bridge, I guess, from the current day to the future state. I'd love to maybe, Brad, if you wouldn't mind speaking to that a bit. I know you mentioned a bit about the families who prefer to use cash now, and how they can gain entry into the system using Pay Theory's technology. But I'd love if you could maybe address a bit more how those bridges are built, and maybe speak to that issue a bit more, because I think it's important to be always cognizant of those user preferences while building the digital future as it is. So we'd love to hear your perspective on that.
Yeah, absolutely. So, I think choice is probably the key word there. People are not only, in certain cases forced to live in a cash world, they often choose to live in a cash world as well. Sometimes as a tax strategy, and some of us might have friends who use that as a tax strategy. But the key thing here, at least from a Pay Theory perspective, is that there's sort of two components to that, and that's like the tech enablement of various forms of payment, and then I think we've kind of started alluding to it, and Martha started alluding to it, the cost of various forms of payment, and who gets charged what in the fintech space, and within banking, beyond that. So we have several, and I think in the QA somebody has asked a question about who we service as well. We have several stakeholder groups that we work with, and we try to make sure that we have solutions that work for all of them, right? So schools, daycare facilities, and so forth have, especially in our markets where a lot of these groups are mission driven, they as part of their core mission to make sure that access is there for everybody, right? If you're a family, you want to be able to pay when, where, and how you want to pay. You'll hear me say that a lot, because that's just kind of a mantra around here. And so we try to come up with tools to marry those two options. And so, I hate getting out over our skis here, but we're working on other solutions around sort of buy now, pay later type services that will mix in with what we're offering. And Martha was mentioning, debit cards and other offerings like that. So again, those all really fit into our mission of providing inclusive solutions around the point of payment. The difference that, it's a nuanced difference, but the difference between, for instance, preloading a debit card and the virtual cash component of what we're offering is really one of sort of presaging when you're going to pay, right? So if you're going to load a debit card, a lot of times that could be through some sort of payroll or other process, and those things are great. But you kind of have to do it ahead of time. And if you don't have that free cash at that moment to load those cards, you're not necessarily sitting there with this, that's a great on-ramp into a digital world, right? I'm gonna put the cost of that to the side, because there are, debit offerings that are not cost effective to families as well. Mochify sounds like they've crafted their program to be very, friendly to the consumer. But in cases where you don't have the ability to go and do that ahead of time, right, you still are being asked to pay for things, whether it's a medical bill, whether it's childcare, whether it's your son or daughter participating in an event at school. And in those moments, you need a way to do that at that moment, real time. How do I take care of that solution? And so that's kind of the approach that we've taken there. So I think that's again, it's taking care of all the parties in the mix, right? And I think we'll probably talk about this in the future, not to give away future questions, but we think that it's important to, we use the word inclusive because we're not just serving un- and underbanked populations, we're serving people who want to use cash as well. And, we're serving everyone who's making a payment to any of our merchants.
That's fantastic. I think this is actually the perfect springboard into one of the questions that came up. And I think, Chase, maybe we could kick it to you first off, but it's around partnerships and what you look for, what Zirtu's looking for in a partner. And Brad, I'm sure you'll have more to say about this too, but as you're thinking about partnerships, are you looking more towards traditional financial institutions? Are you looking more towards fintechs? Both. I know you mentioned Reliant Energy, but even outside of traditional financial institutions and fintechs, how does Zirtu think about partnerships, and how is this a key to growth and a key for you in your work?
Yeah, there's no secret there. It's really just at the end of the day, listening to your customers. We make sure, and we're very, again, intentional, that through the onboarding process of all of our users, we're asking those questions. What are these loans for? And who are you asking these loans from? And collecting that data and using that as intentional as possible by saying, hey, most of these loans are going towards energy bills. Most of these loans are going towards, emergency medical needs, or as other things that we've seen is starting a small business. Whatever that may be, we start first with the data and ask ourselves, what are the customers telling us? And then really building from there. And our job is to go out there and find those opportunities and bring them back to our customers versus us trying to just guess what they may need their loans for. So Reliant Energy is a huge one. We're in terms of this conversation and the topic of, really driving in inclusion, not just from the digital economy, but, even people who decide to use cash because that's what they've grown up with, is finding those money sending platforms where they have physical retailers. And we've gone as far as, getting into these accelerator programs with the likes of a Western Union to figure out how we can adopt a cash-based access for consumers who are getting money through partners like a Western Union. So again, it's really going back to that first thing that I said about just being absolutely intentional and really listening to your customers first and going out there and being a servant to your customers and finding the opportunities that best fit their world. Andrew, you and I talked about this bridging the gap of the physical world to the digital world. And we, again, need to be intentional about creating that mirror image of what's happening day to day, from the time they wake up to the time they go to bed, to the people that they interact with, to the things that they purchase. Those things need to be available so that when they do come into the digital economy for the first time, there isn't any kind of fear-based decisions or hesitations in that matter. It's, oh my gosh, this is actually my world, but in a different view and through a different window. And so through partnerships, we're really trying to unlock that bridge between what's physically happening in the real world and how can we digitize that.
Absolutely. I love too that you touched on the data element here. I feel like it's a big theme within this as well, is using the data well to understand who the customers are and what it is that they want and how they prefer to interact with financial services. Martha, I think I'm wondering if maybe there's more to be said too about the data in terms of how data is collected and used. And we think about maybe like a thin credit file example, or there's many examples of this in the unbanked and the underbanked populations. Say could even be like a professional in the tech industry who's just a new arrival to the US, who just doesn't have access to the right credit file to act. I mean, they could have great salaries, a huge employment history, but have lack of access to basic financial tools to use. I mean, I'd love it if you have any thoughts around data. I would love to learn more about that and hear more about your perspective on data in this realm.
Absolutely. And I think that there are probably two areas I'd focus on. The first one is especially fintechs, but even the established credit agencies are now worrying about this, because I think that on a population point of view, something like 30% of the population of the US does have a thin credit file, which essentially just means you don't have enough credit transactions to prove whether or not you are somebody who will be able to get credit. And there are multiple people, one of the firms is called Zopa, for example. I think Credit Karma does some of this as well. But basically what they're trying to do is say, if you make regular payments, you should get credit for that. So whether those regular payments are your rent, other kinds of utilities, or even any monthly expense, that we should be able to track that and basically provide that as establishing your credit worthiness. And some of these firms are actually directly taking it on themselves, where they are both the provider of the data and also the provider of loans against their own analysis. But some are literally feeding into the traditional credit agencies, which in some ways is the ideal, because what we're really saying is we're bringing you in to the established economy, and therefore that you would have the kinds of choices that anybody would have. And I think, Chase kind of rather eloquently put, that you can lead an ordinary life and remove that financial stress. So I think that that's one side. And then I think the other thing that's going on is actually financial institutions looking more carefully about how they use credit scores. So on auto, one of the big innovations from an insurance company about 20 years ago is that the credit score correlates to the likelihood of putting in a claim on your auto policy. I don't think anybody has ever proven that there's a direct causation situation, but there is a correlation. And the insurance companies have been using this for the past 20 years as they assess people for auto, how much they're going to charge someone for their auto insurance, except in states like California that say, no, you can't do that. One of the things that we're starting to see is people like Root and others who are saying, no, we have moved on, we can now measure how well you drive. Therefore, we will price your policy on how well you drive, which is the most relevant thing. How well you drive and where you drive are the most relevant things when you're buying auto insurance. And we're not looking at how you manage your finances, because we don't think that that is what informs us. And I think that there's a little mini revolution going on there of, in fact, has the credit score become such a central focus that we've lost track of some of the embedded prejudices within the credit score, which is, if you didn't get a loan right when you came out of college and you haven't been paying that off, then all of a sudden you're off the ladder. And instead, what behavior do you engage in, whether that's paying your rent or whether it's driving carefully, that tells us that you are indeed worthy of credit or worthy of the best rate that you can get on your auto insurance because you're a careful driver?
No, I really, so much to dig through there. The sort of combination of insurance, fintech, and data is a topic we could probably go on for hours about. It's so fascinating with the ways in which these variables interact. I'm wondering, so we're kind of running up got about 15 minutes here to go. I'd love to maybe shift the conversation to the future. I think maybe each of you, I'd love to hear maybe a couple minutes on this one, but as digital transformation and digitization of products continues, do you think we'll see an increasingly wide gap of users who don't have access, who don't have the ability to utilize these products? And if this gap is going to continue, or if we're going to do anything about it, what can we do? How can we address this gap practically, especially for those individuals that are unbanked or underbanked, not by choice, but by circumstance? So I'm wondering if you, maybe Brad, if you want to kick off, how do you view this gap evolving over time, and what can we do to address it as professionals and investors and innovators in this space?
Yeah, that's a great question. I think that's really the sort of the mission that you're seeing with all these fintechs that are addressing the situation. I think the world will continue to go more and more digital. I think that the digital tools to move un- and underbanked people into the digital side of it, not necessarily the banked side of the equation, will continue to expand. We here in the States, you see in other countries that are skipping generations of technology, it's a little bit easier to get somebody into, well, not banked, into a digital world, simply because we're not, those countries aren't as dependent on the underlying banking system. And so, everything in the States, and the reason why it's, incredibly difficult to really revolutionize, people have been talking about revolutionizing banking and credit card payments and everything for a long time. But at the end of the day, those systems are still relatively the same as they have been for the last 40 years. And we're creating, unique layers on top of those, and rules and regulations often change, which open up opportunities. But at the end of the day, the DDA, the bank account, the checking account, savings account, is still the mesh that keeps the whole system, working together. And so I think that there is the opportunity to do that. But you have this countervailing sort of thing going on with wealth discrepancy. And even it's probably, wealth discrepancy is probably not the right way to look at it, but the number of people who are falling within the groups that we're calling underbanked, people that are living paycheck to paycheck, that's a concept that we haven't really touched on here, but that's over 50% of the population. And we talk about specifically in the groups that we're talking about, you have families, and as a father of 3, kids are expensive. So that even just adds, further to those stresses within those groups. So I think that the digital part of it will continue to improve. But at the end of the day, there's always going to be, a group of people who just are never going to be able to participate in the banking system, and whether that's through or through choice, choose not to participate. And so I think that there's always this need to bridge the gap. And strategically, as I think about what we're doing as a company, I think being there is part of the bridge, right? I mean, like, if we didn't think that we're, beyond the social good and and all the wonderful things, the double bottom line that Chase was talking about. We talk about doing both well and doing good. Those are things that are important to us. But I also think strategic, plain business, back of the envelope, recovering CPA here, you want to make sure that's there for businesses. And I think that, for us, being at that point and helping bridge that gap and being part of that digital solution evolution is really important.
Yeah, thank you, Brad. Chase, would love to hear from you on this issue. How do you see that gap evolving over time as digitization moves forward, and what can be done?
Yeah, I think for me, it comes down to two main points. And the first and biggest one, and through my career in the fintech space, has always been financial literacy, and meeting your customers where they're at, providing options. And there's always, as Brad mentioned, going to be these late adopters. But as we start to progress, we have to make sure that there are ways that everyone can learn about what opportunities and options exist out there. From a Zirchu standpoint, it's literally having a partner like, I'll go back to Reliant Energy, placing a QR code on their physical mailer, where they can scan that and learn more. So again, moving into the partnerships and creating that financial literacy. It's funny, I think about my own real world experience. My introduction to, banking 101 was in middle school. They had you write physical checks out, and making sure that all the lines were completed, in the right way. And you think about today's world, I would actually be interested. I don't have children of my own, but what are they teaching in classrooms? What other, ways can kids learn about this? And this goes to my second point. It's really that network effect and thinking about, okay, where are the next generations customers, where are they at? And it's really across the social platforms. Most actually fintech and investing knowledge is coming from platforms like TikTok, Instagram, and finance. And even though fintech may be an old kind of industry, it's our jobs to really make sure that we're influencing and integrating ourselves into the new world as well, and being a part of those conversations, not just coming up to the table with new ones, but being a part of what these kids are talking about, and using things like the network effect, where, on Zirchu, the way that customers come in is by inviting others to come in with them. My job prior to Zirchu was at Venmo, and how I got onboarded to Venmo was my friend told me about it, and he said, "Don't worry about the bill, just Venmo me." No idea what he was talking about, had no idea what Venmo was, but he brought me into kind of this new way of digital banking. And so we look at that, again, very intentional about this network effect of, as people bring others into our platform, what's next for them? How can we support them? How can we empower them? And making sure that at every corner there is some component of financial literacy backing all of that up across all the channels and everywhere our customers are at throughout their daily lives.
Okay, let's get one more question in. What do you recommend? What should we tee up?
So I think there's a question right now in the Q&A around other forms of financial education and education for the children of parents who may not want to engage digitally, but how do we ensure that? I think Chase just touched on this a little bit, but Martha, I was wondering if maybe you might want to expound upon this a little bit, or anyone else actually. Are there tools to help encourage that financial literacy, and not only in financial services, but maybe insurance as well, savings, other sort of related areas of financial health, as a means of solving this gap and addressing this issue?
I mean, I just have a couple of quick things. I think that I have certainly seen fintechs that have built in financial literacy topics, and sometimes there's a gamification where you get points towards your activities, and as a relationship to that, John Hancock on the insurance side has a vitality program, which is a gamified health situation where by doing healthy activities, you get points and benefits out of that. And I do think that there is a concept of gamification and enticing people to learn. There also are nonprofits that encourage economic education and financial literacy education. But I think that that has been a tough road to hoe. And actually, Chase, I am astonished that you went to school at a time when they were still teaching you how to write a check. But I will say that I am not convinced that either of my children knows how to write a check, or at least they know very well how to manipulate me to make sure that I am the one that writing the check. But Brad, have you seen anything that works in terms of encouraging financial literacy?
I think it's interesting, right? I mean, there are some great, credit debit products out there like Greenlight and GoHenry, which encourage, financial responsibility, financial literacy training for tweens and teens, where you're rewarding your children for doing chores and so forth, right? It's basically a proxy for allowance. And then combining that with the financial literacy aspect. I think the difficult part with those though, right, like that doesn't really address the inclusive part of what we're talking about. And so I think you hit on a number of the organizations that are working on financial literacy. We see it a lot in the education space as well, schools that have financial literacy components. But at the end of the day, it's we talk, and I think various times we've talked about, sort of the generational aspects of this, and breaking that cycle is incredibly difficult. And it's really difficult to focus on the future at times when you're worried about tomorrow or today. And so it's got to be reinforced and reinforced and reinforced. And I think that, I think it's a combination of what everyone is trying to do that really, hopefully, at the end of the day, will help break through that issue.
Okay, I hate to be the Grim Reaper buzzkill end discussion because it's a fantastic discussion, and it's a discussion that, should I repeat, continue, because this discussion is important for society at large and the smart development of this industry. So thanks, Andrew and team, for a fantastic session. That's all we have time for today. And thanks for all of our attendees, had a really strong attendance. Again, this is the continuation of our FinTech Frontier programming. Be on the lookout for future events. And I do want to loudly, enthusiastically, virally promote what someone just put into my ear is potentially one of the biggest prize money FinTech pitch competitions coming up. Maybe there's a bigger one, but this is big. $75,000 in cash prizes right around the corner here in Cincinnati, with customers that are eager to do business with those of you that want to harness the power of FinTech to change the world, all the things that we talked about. So this is the moment to be actionable. We're going to be putting together a brief that you'll see very, very soon. Spread the word. We're darn serious about this. Take slices of this discussion, turn it into a big opportunity. We will create an audience for you. At the end of the day, FinTech Frontier is about matchmaking, finding the entrepreneurs that have the big, bold ideas and mapping them with the customers that can help them get started earlier, faster. We all know that's how companies scale. So we will do everything we can. So thank you for joining us. Big thanks to Mark, Catherine, Abby, everyone involved in putting this together. We did record this. So for those that were not able to sign up, we will virally distribute this. We will use this as go-go juice to kind of get more people enrolled in the movement, but we need help from everyone. Just let the word go forth to everyone that we are serious about FinTech Frontier, and our big milestone event is at the end of October, our big pitch competition. So thank you so much, and we'll connect with you soon. Ciao.